Just 2 months ago, traders everywhere were convinced the market was collapsing. Every rip got sold. Fear was everywhere. People said AI was dead, tech was over, and potentially we were heading into a deeper correction or even a bear market. Now, the exact opposite is happening. The market has ripped 17% in just a few weeks following that period of weakness. AI stocks are going vertical, and suddenly people are acting like this market rally is never going to end. And that right there is why traders get emotionally trapped at market extremes. Because here's the truth. Every market move feels permanent when you're inside of it. And in this video, I want to show to you why this happens psychologically, what I'm watching ahead of NVIDIA earnings on May 20th, and why this market is becoming extremely dangerous short term. Here's the truth when it comes to the market. Nothing lasts forever. Nothing stays the same. There are always ebbs and flows. But when we are in the middle of a market move, we could just go back to March whenever we had the downside from the war between the United States and Iran, which still is ongoing. There was this sense of dread as the market began to sell down. And we corrected on the Qs, IWM, the Dow Jones Industrial, and the SPX never quite got to 10%. It was around 9.74%. But as the market was falling, it felt like it would go down forever. If you just looked at sentiment on Twitter or your choice of social media, you would read all of the doom and gloom that this drop would be sustained into the fall. We were heading down 20%, 30%, 40%. And that's because fear distorts perception. And that's what happened during that downside move that started at the beginning of March. And now fast forward to current day, back in April when things started to turn, we ripped higher, and we are still ripping higher here in May. And so that perception has shifted once again. And now greed and FOMO are doing the same thing. People believe that this rally is just going to run and run and run, and that there will be no end. We are being struck by recency bias. And social media sentiment has flipped miraculously once again. And suddenly everyone feels like they are a market genius. And so we could see this type of feeling, this type of emotion occurs not just in drawdown periods, but also in periods of moving higher in the markets. It's human nature. Here's the thing that we need to keep in mind about this current rally. This isn't broadened participation. This is narrow leadership. With the market being up 17%, AI is carrying everything. It's like Atlas with the market on its shoulders, while there are other sectors that are languishing in bear markets. See, for instance, software, NVIDIA, semis, memory chips, MU, what a beast that thing has been, are driving this market higher, but we're not seeing that broad participation. Crypto is still lagging a bit, even though you do have small caps ticking higher, making new all-time highs. There are market breadth concerns. And ask yourself this question: what happens when the run in semis, in AI, in chips begins to stall and that momentum begins to flag? What happens then? So keep this in mind. This isn't broad euphoric participation yet. We haven't seen that. This is concentration into one particular sector. Now, if you are a subscriber of the channel, you are a chartist, and you know just by going and taking a look at the SPX, the Qs, that this market is overextended. We are stretched supremely high on the charts. The RSI is overbought, and we have had a parabolic move. And here's the thing that we know, just by historically going back and studying the charts, big, strong, straight up moves like we've seen, they don't last forever. And oftentimes they can have an equally steep drop to the downside. And one thing that you can also identify on the charts is that the volume is not exploding. It is not rising as fast as the price action is. So there is a bit of divergence that we're seeing between price action and the volume. And it's no secret the market needs a bit of a pullback, 3 to 5%, just to cool down slightly before it continues to run. Because if it goes straight up without any type of a rest or a pause, it's setting up for an even steeper decline further down the road. This is not all doom and gloom, because we know, and I say this all the time, the market can stay irrational longer than you or I can stay solvent. So we must trade with the trend. We cannot fight the trend. And just because we can see that a correction or a pullback is overdue, that doesn't mean that we can force that narrative onto the market. We have to trade the chart. And just because it does look overheated and because the evidence says that it is, doesn't mean that it can't rip even higher. In fact, that's what looks like is going to continue to happen. But the key is to stay balanced and know in the back of your mind, head on a swivel, that this thing could flip at any moment. What we need to pay attention to here in the next few weeks, number one, is going to be the negotiations that are ongoing between the United States and Iran. We know that the uptick in oil prices has driven inflation higher. And the longer that this continues, many people out there, many economists, many experts are saying that there is a risk for a recession or even a global recession. So this is going to be something that could be that negative catalyst that drops this market and cools it off for a bit, or in fact sends it down even further. We also have the catalyst of NVIDIA earnings coming up on the 20th. It has hit $220 today at the time that I'm recording this, and it continues to push higher after a year-long worth of consolidation. We want to see how they're going to report, what the demand is, and what their forward guidance is. So that's going to be critical in terms of where the market heads from here. And then we also need to take into consideration, what is the impact of a new Fed chair, Kevin Warsh, on the economy, on the markets? Is he going to be dovish? We know historically he's a hawk, but there are some that say he was a pick by Trump because he's going to do his bidding and actually, in fact, advocate for rate cuts. We'll have to see what type of response we get from there, and that's going to be happening soon. His first meeting will be in June. I say this all the time. Don't be a perma bear. Don't be a perma bull. See the market for what it is and know that nothing ever stays forever. Listen, the market is all about cycles, long-term, short-term, and it really is a reflection, a mirror for life. Think of the seasons. I live out here in the East. You have your spring, your summer, your fall, your winter, and then spring comes again. It's the same thing in the market. Nothing lasts forever. It's not an eternal summer. Eventually, you will get the fall into the winter, but things will regrow into a spring and a summer again. But here's the key. When these periods of opportunity come, take advantage of it, but know in the back of your mind that it will not be permanent. And you don't want to lock yourself completely into one side and then miss out on the other side that will eventually come, which will be that downside where you can short. So for now, take advantage of that upside trend, but just know it will not last forever. So how am I playing this right now? I am trading with the trend. However, I am being aware of where we are on the charts. I am watching those highly bullish tickers for nice pullbacks into supports for moves higher, while at the same time having stop set to protect myself from downside movement. The key right now is being patient and waiting for your opportunities, not chasing at highs, not chasing when something's running and feeling like you're going to miss out on something. The market always feels safest when it's near highs and the most terrifying when it's near the lows, but that's usually backwards. Stay balanced in your positioning, be objective, don't get caught up in the exuberance or the optimism. Stay balanced, see both sides, the bullish positioning, the bearish positioning, and anticipate what can come, but always trade the charts that are in front of you. If you've enjoyed this video, please help me with my challenge of getting 1 million people to open a brokerage account and start investing. So if you know someone out there who doesn't own shares of a stock, maybe it's mom or dad or brother or sister, aunt and uncle, your friend, then connect them with the 1 million investors challenge by May 2027. My goal is to get 1 million people to open a brokerage account and to buy 1 share of a stock. It's very simple to sign up. Just click the link in the description below. Check out one of these videos here when you have some time. And if you haven't, smash that subscribe button and stay safe out there in the markets.
it's losing its bite.